Ever dreamt of owning a slice of Bitcoin without the hassle of wallets and exchanges? Well, the Bitcoin ETF boom might just be your ticket. Or maybe your roller coaster ride. Buckle up. Hey everyone, and welcome! Today we're diving headfirst into the world of Bitcoin ETFs, what they are, why they're suddenly everywhere, and what it all means for you. We'll unpack the hype, explore the potential pitfalls, and see if this is truly the gateway to mainstream Bitcoin adoption or just another shiny new toy for Wall Street. Bitcoin. The word itself conjures images of futuristic finance, wild price swings, and maybe even a little bit of mystery. Like, where did all my socks go? For years, it's been the domain of tech-savvy early adopters and die-hard believers. But things are changing. Wall Street is knocking, and the key to wider access? The Bitcoin ETF? Because apparently regular stocks just weren't volatile enough. So what exactly is a Bitcoin ETF? Think of it like this. An ETF, or exchange-traded fund, is a basket of assets, stocks, bonds, commodities that you can buy and sell on the stock exchange. A Bitcoin ETF, then, is an ETF that tracks the price of Bitcoin. Instead of buying actual Bitcoin, you buy shares of the ETF, which in theory should mirror Bitcoin's price movements. In theory, like my diet mirroring my weight loss goals. Now, why is this a big deal? Well, for starters, it makes Bitcoin investing incredibly easier. No more wrestling with crypto exchanges, private keys, or the fear of losing your digital fortune in some hacking mishap. You can buy and sell Bitcoin ETFs just like any other stock through your regular brokerage account. This opens the door to a whole new class of investors, the everyday folks who might be curious about Bitcoin but intimidated by the technical complexities. Think grandma finally understanding what her grandkids are talking about at Thanksgiving. This increased accessibility is a game changer. It brings Bitcoin into the mainstream, legitimizes it in the eyes of traditional investors, and potentially drives massive amounts of capital into the market. Think of it like the Wild West of crypto, finally getting a sheriff and a rule book, or maybe just a slightly less dusty saloon. But hold on, before we get too carried away, there are some important things to consider. The Bitcoin ETF landscape is still relatively new, and there are different types of ETFs with varying structures. Some ETFs hold actual Bitcoin, while others track Bitcoin futures contracts. This difference can significantly impact how closely the ETF tracks the actual price of Bitcoin. Futures-based ETFs, for example, can experience something called contango, where the price of the futures contract is higher than the spot price of Bitcoin, leading to a discrepancy in performance. It's like ordering a pizza and getting a picture of a pizza instead. Another challenge is regulation. The regulatory environment for Bitcoin ETFs is still evolving, and different countries have different rules. This can create uncertainty and potentially impact the availability and performance of ETFs in different regions. For instance, the US SEC has been quite cautious with Bitcoin ETF approvals, leading to a long and complex process for issuers. They're playing hard to get, basically. And let's not forget about fees. Just like any other investment product, Bitcoin ETFs charge management fees, which can eat into your returns. These fees can vary significantly between different ETFs, so it's crucial to compare before you invest. A seemingly small percentage can add up over time, especially if you're holding the ETF for the long haul. It's like those subscription services you forget about until you check your bank account. Now here's where things get interesting. The rise of Bitcoin. ETFs isn't just about making Bitcoin easier to buy. It's about the potential for institutional adoption. Think about pension funds, hedge funds, and other large institutional investors. Many of these institutions have been hesitant to invest in Bitcoin directly due to regulatory concerns and operational complexities. Bitcoin ETFs provide a regulated and convenient way for these institutions to gain exposure to Bitcoin, potentially unlocking a massive wave of institutional capital. It's like the cool kids finally inviting Bitcoin to the party. This institutional adoption could be a major catalyst for the price of Bitcoin. As more institutions allocate a portion of their portfolios to Bitcoin via ETFs, the demand for Bitcoin could increase significantly, potentially driving up the price. It's like adding rocket fuel to an already volatile market. Just try not to get whiplash. But here's the catch. While increased institutional adoption could boost the price of Bitcoin, it could also increase its correlation with traditional financial markets. Currently, Bitcoin is often seen as an uncorrelated asset, meaning its price movements are not closely tied to the stock market or other traditional assets. However, as more institutions invest in Bitcoin, this could change. If Bitcoin becomes more correlated with traditional markets, it could lose some of its appeal as a hedge against inflation or economic uncertainty. It's like Bitcoin losing its rebel without a cause status. So, where does this leave us? The Bitcoin ETF boom is undoubtedly a significant development in the world of crypto. It's making Bitcoin more accessible to everyday investors, potentially paving the way for wider adoption and attracting the attention of institutional giants. But it's also important to be aware of the challenges and potential risks. The regulatory landscape is still evolving, fees can eat into your returns, and the impact on Bitcoin's price and correlation with traditional markets remains to be seen. Basically, it's a wild ride and nobody knows exactly where it's going. Ultimately, whether or not you choose to invest in a Bitcoin ETF is a personal decision. Do your research, understand the risks, and consider your own investment goals and risk tolerance. Don't just jump on the bandwagon because everyone else is doing it, unless of course the bandwagon has a built-in bar. Make sure to like and subscribe to stay current on all the hottest market stories, and we'll see you here next time.